we have this is from module A only, cash flow statement. Okay. So like how we have prepared a balance sheet, right? Just now banking balance sheet we have done. And before this morning in session, we have done company's balance sheet, right? This is also one type of financial statement. Okay. Comes under category of management accounting actually. Okay. Where you people will be talking only about how much cash flow. The wording itself it says how much cash is inflow and how much cash is outflow from a business. That only we will talk about this. Okay. Cash inflow and cash outflow. Okay. So first we'll see what you mean by cash. Here, according to this statement, cash is nothing but here cash in hand, what you have got in the hand. Okay. And demand deposit with the bankers, like in the form of current deposits, a company will keep with a banker. That too only it is called as cash, according to this statement. And cash equivalents is nothing but here short-term and highly liquid investments that are readily convertible into a known amount of cash. Like for example, gold, bonds, NSE bonds, NSE, National Saving Certificates. That kind of investments will come under a category of cash and cash equivalents, which is readily we can convert into cash without any, what to say, time gap. Immediately you'll get the money. That is called as cash. Okay. Now, inflow of outflow of cash means what? All transactions that lead to an increase in cash and cash equivalents are classified as cash inflow of cash. And all transactions that lead to decrease in cash and cash equivalents are classified as outflow of cash. Means when cash is any transaction, it might be sales, it might be purchases, whatever is there. Any transaction that leading to outflow of cash, it's called as cash outflow. And when the transaction which is cash is coming into the business, that will categorize as cash inflow. Okay. Now, what do you mean by cash flow statement actually? As I said you clearly that a cash flow statement tracks the inflow and outflow of cash, providing insight into a company's financial health and operational efficiency. Okay. So I want you people to make a note of these points. From here you make it from cash and cash equivalents till meaning of cash flow statement till here. Okay. Once you're done with this, just let me know. I'll go further. Done with these points? So now, as I said you, it is a cash flow statement is a statement actually. This statement consisting of 3 activities. How many activities? Cash flow from operating activity. First part of the statement. Okay. Second part of the statement is investing activity. And third activity is financing activity. So operating, investing, and financing activity. Now in exam, they may ask you what are the activities consisting of cash flow statement? What will be your answer? All 3 together. After adding all these 3 together, that time it is called as cash flow statement actually. Okay. Now, what do you mean by operating activity? See, in a business, if you want to do any company want to run means they have to do a sales or they have to get money. And to get money, we have to spend money first. All agree with this now? First, we have to put some activities, then only we'll get the money, right? So operating activity is nothing but cash flow from our include money spent. We have to spend the money first, or generated by selling product, goods or services. The operating activity and the cash flow statement include any source that you are sources and uses of cash from business activity. Example like receipt from sale of goods and services, interest payment, tax payment, payment made to supplier of goods and services, salary wages payment to employees, rent payment. So these are the examples of operating activities. Okay. So without this spending, you cannot make money. Agree with this? If you don't bring the goods, what you will sell. If you don't sell anything, how the profit will be made? So purchase of goods should be there, must. Okay. So this is your operating activity. Next, we have got investment activity. See, any business if you want to run, we try to have some assets with us like machinery or building or land or plant. We should have it. Okay. The amount after getting from the operating activity in the form of sales and other stuff, you will invest that into the investing activities in the form of purchasing of assets. Like example, here I have given you, see, cash flow from investing activity include any source of and use of cash from a company's investment, purchase or sale of assets, loan made to vendor or received from customer, any payment related to merger and acquisition are included in this category. In short, changes in equipment, assets, and investment related to cash from investment. Investing activity include PP and E, plant property and equipment purchases such as warehouse space, office equipments, or production plants. I told you right. You need to buy asset first. Okay. Next, proceeds from PPE sales. You can sell also sometime. After using for some time, you can give it to other people also, or you can sell it to scrap. That in these two cases, when you purchase the plant and machinery, cash is inflow or outflow. When you sell any plant and machinery, inflow. That only they are talking about investing activity. Next is financing activity. Financing activity is nothing but to buy any asset and all, you need money. Yes or no? Yeah. From where it will come? Either from share capital or from loans or from finance activity or taking any finance from any company or any organization, any institute will buy. After taking the loan, what we should give them in return? Either we should pay interest or we should pay dividends. Okay. Or after some time, we need to pay back the principal amount also, what we have taken. Okay. So when you take the loan, it is inflow of cash. When you pay the loan, it will become outflow of cash. Is it clear till here? Okay. Make a note of these activities first. Elements of cash flow statement, and this all. Once you are done, just let me know. Huh? Now, why we need to prepare this cash flow statement? Okay. So this cash flow statement we will be preparing for knowing two things: inflow and outflow of cash. And second thing, it will be helpful for a management for making the decisions actually, whether to run the business, to stop the business, whether to produce or whether to buy. Okay, that kind of things will give you. And second thing, we will come to know from which activity how much money is coming in and going out, whether from operating activity, whether from financing activity or from investing activity, we'll come to know. And third thing is, it will focus only on the cash flow of a business, not other than cash flow. And it ignores the credit transaction. It will not talk about that. Okay. And this will talk about third party obligations of making the payments. Like, for example, whether you have got the sufficient fund to make the dividend payment or not. To check that, we will make it. And the last is short term investment if you want to do. That will give a clarity about short-term investment from a business side to the other business. These are the objective of cash flow statement. Limitation, ignore non-cash transaction. As I said it will not consider the non-cash transaction. It will take only the cash transaction. Ignore accrual concept, which is coming in the future. No, that will be ignored completely. Will not agree in that. It is there. Yes, it is there. If it is not there, no need to worry. Okay. Completely historical in nature because we do in the past transaction only. We will come to know. And all accounting is historical only. Nothing is current. Okay. And this is not a substitute statement for income statement. Income statement is separate and this is separate only. Okay. And not suitable for judging liquidity of enterprises because it don't consider the accrual. So liquidity is not that good from this statement will come out. Okay. So these are the objective and limitation of cash flow statement. Any doubt in this now? Next, we'll move on to the next topic, uh, fund flow statement actually. Okay. I'll share you the screen. Screen is visible now. Done. Next is our fund flow statement. This is bit opposite of cash flow statement. Even this also talks about fund inflow and fund outflow only. But in this, we will consider accrual concept also. What is going to receive in the future is there? No. That also we'll consider. This is a statement which helps us to know inflow and outflow of cash, that is sources of fund and application of fund. It talks about from where and all the money have come to the company, and that is sources of fund, and where and all a company have spent the money, that is application of fund. Of a particular period, in the sense 1 year only we will prepare usually, that is the one. Okay, so components of fund flow statement is we have got first is sources of fund and application of fund. In sources of fund, like example term loan, issue of shares and debentures, decrease in working capital, sale of asset, with this all money will come into the company. Whereas application of fund, repayment of loan, payment of dividend, increase in working capital, payment of taxes and all, that will be outflow of company. Okay. How to prepare a fund flow statement? We have got 3 steps in this. Step number 1, preparation of schedule of changes in working capital. Step number 2, prepare a adjusted P&L account. We have done this already, P&L account. The same one here. Okay. And the third is statement. So first we'll go back to the step 1, preparation of schedule and schedule of changes in working capital. No, do you have any idea what do you mean by working capital here actually talks about? Working capital. So here working capital is nothing but short term, how much money you have got to run the business. That comes in the category of schedule of changes in working capital. Okay. Now I want you people to make a note of this components of fund flow statement 1, 2, and this you 1, 2 you take it done first. Then I'll continue from here. Okay.